Welcome to today's webinar, Meet the VC with Austin Clements from Slauson & Co., presented by Early Growth and Escalon Services Company. My name is Sangeeta George, and I'm the Event Marketing Manager with Early Growth, and I'll be your host today. Here are a few housekeeping notes. This webinar will last approximately 60 minutes, including for a Q&A at the end. You can place your questions in the Q&A at any time. This webinar will be recorded and will be sent to all the registrants within 48 hours of the presentation. You can also find the recording and all the previous recordings on our YouTube channel. The link to it will be sent to you in the email. About Early Growth. Before we get started, let me tell you about Early Growth. At Early Growth, we've got the entire finance stack covered. What that means for you is really two things. First, you get a strategic partner in growing your business. Our CFOs, with their years of experience and dozens of startups under their belts, help you see what's coming, good and bad, and take advantage of it. From strategic decisions to fundraising, they have seen it all before. Second, our CFOs, senior accountants, and tax advisors take care of all the blocking and tackling related to day-to-day, month-to-month, and year-to-year of your finances, so you can focus on your business. Both Early Growth and our CFOs have been around the block a few times. We have helped and served over 5,000 clients coast to coast and around the world. As always, our CFOs have helped our clients raise billions of dollars. We would love to help you and serve you as well. We believe in delivering peace of mind by providing you one-on-one solutions for all your needs, requirements, including CFO services, HR, accounting, taxes, and insurance. We'd like to protect your profitability by giving you a sole point of contact to answer all kinds of questions and strategic dashboards to help understand your business company better. We want to be a partner in growth to help your business grow by working in the back end, and you can focus on the growth side of your business. We've also got a special promo running. You must all have started planning your 2023 taxes. You want to get a provider in place before the end of the year so you can do effective tax planning before the year ends. We have a promo running to help you with that now. Get $500 off your total 2023 tax preparation. To kick us off, I want to do a quick poll question to see who's in the room. I've launched the poll and you can drop your answers down there. Okay, I'm going to see quite a few responses right now. So let's continue. We have a moderator, David, with us today. He is a business development manager with Early Growth for over 3 years. Prior to joining Early Growth, David was a financial analyst at VIP Capital. In his spare time, David likes to hike even through the Pacific Crest Trail and Continental Divide Trail in their entirety. Before we proceed, just a reminder, if you have a question for a VC, please put them in the Q&A window and not the chat. So now here to introduce the partners and take over, David.
Hey, thanks, Sanjeet. I appreciate it. I really can't do this without our partners. So I want to take a second before introducing Austin for our partners to introduce themselves. Let's start with Anna from TriNet.
Hi, everyone. Anna Evans with TriNet. Thank you so much for joining today. Just to give you a quick snapshot of what TriNet does, basically we are an outsourced HR partner for early stage startups. We help you with payroll, compliance, benefits, workers' comp, all bundled in under a technology platform. We've worked with a lot of the big names in technology, Ring, Snapchat, Netflix, Airbnb. They were all clients of ours and started off small, and we helped them to scale. So would love to work with you in the same way. Thanks so much.
Thanks, Anna. I really appreciate you being involved. Let's go next to Vera from First Republic Bank.
Thank you, David. Hi, everyone. I'm Vera Liebenthal. I'm a senior business banker here at First Republic. Many of you probably have heard about our involvement in the ecosystem, but we're certainly very deeply entrenched in serving the founders and the startup world, as well as the emerging managers and the VC side of the ecosystem. So, with that focus, that also means that really our clients receive specific benefits that are meaningful to them within banking, non-banking products and benefits that effectively translate into extending of their runway through certain reimbursements that we can provide towards their P&L expenses. And the third, and no less important, is the advisory and the consultative component of really helping them with the resources, the opportunities, the connectivity that they may need based on where they're at in their in the journey of the life cycle of the company that they're leading. So with that said, I think that this is probably the ultimate sort of package to help your company grow, in the sense that the bank is interested in helping our clients scale faster. Thank you, David.
Thank you, Vera. Really appreciate you being involved. Thanks for that. Do we have anyone from Stubbs on the line as well? Would like to give you the floor. I didn't see anyone. So Stubbs Alderton, full service law firm. If any of you need legal support through, negotiating your next term sheet, raising a round, just helping with overall corporate structure, Stubbs is one that we like to recommend to our clients. So feel free to give me a shout on the side, and I can always make an introduction there if you're interested in making a connection. All right, so without further ado, I think that means I can introduce today's guest VC, Austin Clements. I've been looking forward very much to this presentation and having a chat with you. We've had some initial conversations, and really everything I've heard from partners in the ecosystem is an amazing VC, an amazing resource in kind of the entire ecosystem, and someone that doesn't shy away from giving their time and their focus to their portfolio companies. So Austin, I won't steal your thunder. Let you kind of give a quick intro on yourself and the fund, and would love to hear kind of high level how you got started in VC to begin with.
Sure thing. First and foremost, thank you, David, and to Early Growth and the entire team for putting this on, and the sponsors. And Leonard Lonzi, as he pointed out, is here. One of the sponsors, people that do their support. I want to call them out, so I know that he was a supporter. So to give you a little bit of background on me and who I am and what I do, I'm the managing partner at Slauson & Co. We're a pre-seed and seed stage fund rooted in the idea of economic inclusion. What that translates to is to two primary areas of investment. The first is on the B2B side. We invest in SMB tech specifically, so tools and technologies that support the next generation of small business owners, contrasting that to, of course, larger enterprise SaaS, which we don't do. For the most part, like we're very, very focused on SMB tech. And then on the consumer side, we invest in what we call culturally aligned consumer. So this is products and services targeting underserved populations and overlooked demographics. We have our inaugural fund, which is a $75 million fund. And we're usually investing between 250,000 up to about 2 million. We lead most of the deals we do and have a very, very actively engaged LP base, starting with a bunch of corporations that have invested in us, like tech companies like Google and PayPal and other folks like that. And then a bunch of other funds and a bunch of other entrepreneurs who built multi-billion-dollar companies that all want to lend their expertise and their networks in support of the types of founders that we're backing. We're a US focused fund, but invest across the country, not just in LA, which is where we're based. And to go backtrack a little bit into my background, I was born and raised in LA, in South LA to be exact, in Gardena and then Ladera Heights to be more specific for those of you who are familiar with Los Angeles or South LA. Went to Morehouse for college in Atlanta, which loved that experience, and graduated, ended up working in investment management, really in private wealth. There I fell in love with investing, ended up leaving that opportunity to start my own business where I was doing web and mobile development. Basically, I ran a dev shop and really started working with a lot of small business owners locally and applying technology to their businesses to help them take it to the next level. And it was kind of in that role where I started seeing that there were these certain companies. I started reading TechCrunch articles about companies getting funded and millions of dollars being invested in the same technologies that I was building. And it always felt like, shout out to Howard University. But I have, basically I was seeing all these companies getting funded and I didn't really understand how the mechanism or the asset class. When I was in investment management, I knew about public stocks and bonds and things like that, but didn't really know about alternative investments as much, and certainly not about venture capital. But as I started to look into that industry, it seemed like the most like aligned thing that I could possibly be doing. Basically, it was a combination of investing, working with technology, and working with entrepreneurs, which is three things that I love doing. So really realized that that's what I wanted to do with my career. Kind of became obsessed with the idea of it and didn't even look anywhere else, and kind of haven't second guessed since then. So I ended up going to NYU, shout out to NYU, for grad school to get a job in venture capital, and landed a role at 10110 where I was for about 4 or 5 years. Kind of started as an associate, worked my way up to a principal, and then ultimately left to start my own firm, Slauson & Co., which I already talked a little bit about. So that's kind of from the beginning up until now.
Very cool. Yeah, you don't hear a lot of VCs knowing from the beginning and jumping in with both feet, kind of blindly into VC and having it all kind of work out too for their favor. So very
yeah,
cool.
I mean, to say that it was like a smooth ride would be quite the
Well, that was going to be my next question too, was like, what was that transition like, going from having that investment background, maybe doing some entrepreneurial efforts yourself, to really getting involved with founders and learning how to be VC? Like what was that process like for you?
Yeah, absolutely. Actually, it's a great question. The stuff that made me think that I was even capable of doing it was all the blogs that I was reading. So this is 2010, 2011, where I'm like reading Fred Wilson and Mark Suster and Brad Feld and just like digesting everything that they write and publish, and really getting excited about it. But the thing that excited me the most was like a lot of their philosophies of how they worked with entrepreneurs were things that I was saying already to the small businesses I was working with as well. And I don't proclaim to be as smart of them as the venture capital stuff, especially at that point. But what I recognized, there was some alignment or some level of understanding that I had that made me say, like, hey, like I could do this, and for that matter, I probably should do this. And so I kept talking to people about like getting into the venture industry and trying to figure out what it was. And I remember a friend of mine told me, I was like, yeah, I want to be a VC. Like that's like my only goal. Like I'm going to go back to business school for that. And he was like, have you ever seen the movie Rudy? And I was like, no, I haven't watched Rudy. And he was like, you should go watch Rudy. And he was like, trying to get into venture is like, you kind of have to be like Rudy in how his approach to how he was just obsessed to being a football player. And when I watched it, and I'm obviously I'm talking about it a decade and some change later, so it had an impact on me. But that was kind of the playbook. It was just like a very all or nothing. When I went to business school, I said I'm going to graduate with a job in venture capital, or I'm not going to graduate with a job at all. And true to my word, I didn't graduate with any job at all. So that's kind of how it goes. But ended up landing the thing at 10110.
Landing on your feet. Yeah, that's very, very cool story. I think, having read, and followed so many people, influential VCs, and seeing that kind of cultural alignment fundamentally at your core was a good indicator that this was the right field for you. Well, very cool. I appreciate you sharing that with us. So you had mentioned a little bit about the fund and kind of its mission to provide financial inclusion and look for founders and businesses and kind of underrepresented founders, if you will. So love to learn a little bit more about how you monitor, like how do you measure that specifically? Like what metrics are you looking for? How do you kind of define that?
Sure. We typically say, or we said when we were raising our first fund, that we are not an impact fund. We do expect that we will be tremendously impactful. And what we meant by that was we don't have diversity targets. We don't have anything that we're striving to hit that serves any other purpose outside of generating cash on cash returns and IRR. And we are out to outperform everybody. No exceptions, no like in this category or for this demographic or something like that. We think that we can outperform everybody. And part of the reason for that is the center part is because of our mission around economic inclusion. A lot of people view it as sort of conflicting, like, oh, you're trying to do this do good thing over here, but you're also trying to generate returns, and it's going to be very, very hard to do both. And we say, no. The reason why we are able to generate the returns is because we have this opportunity sitting at the center of what we do. And what I mean by that is, venture capital, as we all know, has historically served a very, very specific demographic, primarily white men in just a few cities. The number of women that get funded, the number of people of color that get funded are just, the statistics are abysmal. And a lot of that just has to do with the fact that these people are disconnected from those communities in many ways. It is an industry that, for as long as I see it, will continue to rely on a lot of trust and a lot of sort of borrowed credibility from other people. Everything from the warm intros that are required to just to being able to attract talent and things like that. A lot of that relies on close-knit networks. And I sort of in many ways view that as a feature and not a bug. Whereas, but the bug itself is the fact that because the industry started and was concentrated amongst a specific network, that particular network is what continues to be a part of it. And so our hypothesis is that there's talent outside of white men in just a few cities, and if we can take really, really talented people from across the country and give them access to the capital, give them access to the resources and the networks that you would otherwise see in Silicon Valley, and do it in a way that's authentic to the communities that we aim to serve. And we think there's just a massive opportunity to create a fund that could last for decades to come and perform and compete with the best of the best.
Yeah, I love that. I mean, it's not just access to capital, but as you mentioned, access to the ecosystem. And I think that as we talk about it, you know, why you lean in so heavy with your portfolio companies and really open up that network to them, because that's, you know, just as important as access to capital, right? It's the people that you know, the circles that you maintain that really help you along in your journey.
100%. You know, it's like, this is a network-based business, and I actually like that. It just comes that we come with a different network and a different perspective, and thus our results in terms of who we allocate capital to are different. Again, I said we don't have targets of like diversity targets, but even with that said, 95% of the companies that we've backed have a person of color on the founding team. 50% of the people that teams that we back have a woman on the founding team, and those numbers are sort of unheard of in venture capital more broadly. But it comes very, very natural to us when we lead with a message of inclusion. Naturally, the people that are most attracted to that are those who have been historically excluded. Mm-hmm. And so when so we talk about how we're purpose built just for this purpose of helping you and these types of groups succeed and thrive in this market. And you know, and so we're proud of the work that we do, but ultimately we think that's what our competitive advantage is as well.
Yeah, definitely. Okay, well, thanks for sharing that. I appreciate it. It's awesome. One of my questions is always around like how to source deal flow for you as a VC. So would love to learn a little bit more about how you go about finding business. I understand that you also have an accelerator that you know, helps kind of get these companies started from the ideation phase. So tell us a little bit more about that, and you know, best methods for you to kind of find the right deal flow that you're looking for.
Sure. One of the things, our deal flow comes from basically three primary areas. The first is the folks that we know, usually founders or other VCs or like service providers, that you will, the early growths or the lawyers or the bankers of the world that are connected to us as well and know what we stand for and know what we're about, and refer deals to us that way. So that's kind of one way that we take. The second way is cold inbound, meaning people that are reaching out to us that don't have a mutual connection. We certainly understand the barriers that it creates, that if you need to know somebody who knows me, then you know, I know a lot of people, but I don't know millions of people, and you know, and we want to make ourselves very accessible. So with cold inbound, we take it very seriously. We have made investments from people that have just written to us without an intro before. Some of them are doing very, very well. And in other parts of the country, there's a company called Pressed Roots, for example, which is effectively the dry bar for women with textured hair. And it started in Dallas. She's expanded to 3 locations. She sells out seats every day and basically has more demand than she has supply for this. And that was somebody who reached out to us through LinkedIn of all places. And we ended up connecting and making that investment, and she's crushing it. So, you know, so that's the second way is sort of cold outreach. And then third is what you touched on, David, which is we run an accelerator called Friends and Family. So Friends and Family was started because we recognize that even the companies that we back oftentimes or we're pre-seed and seed funds. So we're the first institutional capital that you know that most people will see, and we compete with other pre-seed funds. But even still, sometimes people like have a great idea or have some initial concept that they're kind of working on, but they don't have enough to get from 0 to 1 to even be in a position to be attractive or stand out to VCs that are investing even as early as we are. And usually that capital that gets you from 0 to 1 usually comes from what we all have come to know as a friends and family round. Not surprisingly, if you look at the economic distribution of wealth in this country, a lot of people, that particularly people of color, don't have access to capital that serves as a friends and family round. And that in and of itself is a barrier to even getting yourself in a position where you can attract that first $1 million. And the friends and family round often is small and like helps you really either hire your first employee or buy some inventory for something or sign a long-term agreement with somebody. And it comes. I started Slauson & Co. off of basically a $50,000 loan from my sister that she took from equity out of her house. Without that, there would be no Slauson & Co. I wouldn't have had the capital to basically leave my job and try to get things off the ground. And we can see that $50,000 has enabled $75 million to go into the hands of people of color. And so it's just outsized impact from friends and family. That being said, we have so the accelerator we titled Friends and Family. It's a 12-week program with 20 participants, 20 participating companies, and each company receives a $25,000 non-dilutive capital grant. So it's just straight cash. You do what you want with it. We're trying to help you get from 0 to 1. Not surprisingly, people like free money, so we got see a lot of businesses that apply to that program. We're really excited about it. We just kicked off our second cohort, the winter 2023 cohort, which has just some phenomenal companies from a lot of different backgrounds and speaking to a bunch of different industries, certainly even beyond tech companies. But what we know is that this support group and the access and the caliber of people we're bringing to the table are second to none, that I put against any program from Techstars to YC to whatever. We have last week Jonah Peretti, for the founder and CEO of BuzzFeed, came to speak to the group. The week before that, we had Stacey Brown Philpott. Tomorrow we have who's probably one of the most successful Black women in tech from an entrepreneur standpoint. She grew CEO of TaskRabbit. And then tomorrow we have Jeff Wilkie, who is the CEO of Worldwide Consumer at Amazon, basically kind of number 2 or 3, depending on how you look at it, at Amazon for 2 decades. And that's the caliber of people we're bringing to the to talk to people at the very, very early stages of their business about how to get off the ground and how to get from 0 to 1. And so naturally, that's kind of a great source of deal flow for us, because we see a lot of people that want to apply to that program, and then some that go through it, and then occasionally we'll invest in companies that go through that program.
Very cool. Okay. 12 companies, it's a biannual.
20 companies. We do it once a year right now, and each company gets $25,000.
Yeah. Okay. Great. And once a year right now. That's awesome. What's the application process look like? If there's founders in here that think they might be a fit for that, how would they go about getting their info to you?
Absolutely. So probably the best thing to do is follow us on social, because we'll post about it all the time. So we're Slauson & Co, spell out the word "and" on pretty much all social platforms. So feel free to do that. That's probably the easiest way. If you want to be on sort of the email notification list, we partner with Grid 110, which is a nonprofit that's based in LA that does a lot of work around entrepreneurship to run the program. And so you could go to grid110.org, and they have a newsletter that they send out, and you can get on for that. We've historically opened up applications in the fall, and then we end up going through the whole application process, selection process, and then the cohort kicks off in January. So we're, again, just kicked off a couple of weeks ago for this current cohort. If we're not even thinking about the next cohort just yet, or what happens next, we're very focused on this one, but But you know, if we do the same thing we did the last couple of years, then it'll be fall when the application's open.
Okay, great. Well, what does the application process look like from a
Yeah.
diligence perspective? How do you kind of de-risk those early investments? I guess there's two parts of the question. How do you do that at the accelerator stage? And then whether you're looking at making a follow-on like pre-seed or seed round, you know, you're getting involved very early. Obviously not a lot of early traction at that point. So how do you think about those investments and going through a de-risk process of that founder and that investment as a whole?
Yeah, absolutely. So on the investment side, or let's say on the friends and family side to begin with, friends and family. So there's an application, probably 20 questions, where it's as much psychographic as it is like coming up with traction numbers and things like that. Like we view it very much as a community. Where we want people who want to be part of a community and part of a network that supports each other and learns from each other. You know, so that skews toward a certain type of founder very heavily that we screen for. And then we want to know that capital can actually be meaningful. You know, $25,000 is a whole lot of money to some people, and it's not that much money to others. And, you know, so but we want to make sure that like it's at a stage where that could really move the needle for somebody or help them kind of kick to the next level. So they have some clarity around the near term spend and allocation of that capital. So those are a couple of things that we look for on the application process. Then we do interviews, and then we select a cohort, and we tell people, and then we announce it in January historically. On the fund side, so people that get intros to us or just cold outreach to us, we have basically 5 criteria that we look at, which is the team, the product, the market, alignment, and then the deal terms. And we, you know, when we're talking to companies, we're always thinking through the framework of those basically 5 categories. Because we invest so early, I wouldn't call those things equally weighted. The team is far and away more important than the rest. We want to know that the team is appropriate for that market. You know, but we want to see that it's a strong team with clarity around their vision. And to that end, one of the things we always say, sort of, when we're looking at team, like what do we look for in a founder? We usually say that they typically sound delusional with their vision, but pragmatic with their execution. And that's where you know, they talk to us. These are very, very ambitious people that are like, have clarity around where they want to go. And it might make you a little nervous, like, well, that's, I mean, okay.
It costs a lot of money. Yeah.
That's going to cost a lot of money. That's exactly. And then, but then they're able to back it up without saying like, I don't know exactly how I'm going to get there, but I know that the first 2 or 3 steps are X, Y, and Z. And here's how I'm going to do this, and this is why I know that is there, and this is what I need this sort of seed capital for. So we love that. And then the other thing that we look for in founders or a founding team is that those 5 things are team, product, market, alignment. So that's alignment with our fund in terms of what we do. If you pitch me a biotech company, I could be like, sounds amazing that you're curing cancer, and I have nothing to offer you, so it doesn't make sense for me to invest. And then the last is deal terms. So like, if we're just way off in terms of valuation or things like that, then we wouldn't make the investment either. But I was going to say that the other thing that we look for is people who are sort of solving a problem for themselves, if you will. We say that your lived experience is your competitive advantage. I believe that's probably the first thing that you'll see on our website. And it's because we know that, particularly in the communities that we're targeting, they've been told over and over and over again that they have to fit a particular profile or present a certain way or look like this or try as hard as they can to mirror this or have their resume reflect this. And like when you're building a sort of outlier company, fundamentally you have to be bringing something different to the table, and that starts with a different perspective, and the only perspective that you have is yours. And the people that lean into that and embrace that and understand that their unique experience is going to be the foundation of what sets them apart over the long run, and helps them to combine the different worlds that they've touched or the different customer types that they've been themselves, is that's where the juice is. That's where the exciting part is, and people that really live and lean into that often thrive.
Yeah, it's easy to get fired up about passionate people solving big problems, right? Yeah, a lot of follow-up questions that I could kind of fire at you after all that. I appreciate that answer. I noticed you did mention team first, so thank you for kind of diving into the importance of that, because at an early stage there really isn't anything other than the team. And along those lines, like, have you ever invested in a solo founder? Do you look for them to have a team around them? I see you shaking your head yes. I'm guessing solo founders not going to scare you away.
Done it. Probably, well, I'll give an example of a guy, African-American guy, lives in LA, he did have a kind of a big tech background, if you will. He was a solo founder. We closed on his deal the day after he left his job, his full-time job at a company. Like there was not a company, basically. It was like, I'm leaving, all right, now let's do this, and we're signing docs. And so we're not afraid, and it's probably worth pointing out, like, because I know that we invest very early. We'll invest on an idea. He certainly didn't have a product or anything like that at that point. But I think this is a slight detour from the question, but it's probably worth pointing out that we don't ever pass on something because it's too early. And probably a lot of seed and pre-seed funds often use the phrase too early as kind of shorthand for something, and it's frustrating, and I can completely understand how that could be frustrating to a founder. Austin, I just heard you say you backed a dude that didn't have a line of code written. Why are you going to tell me that, like, I'm not far enough along? I have way more than that, but usually what it is there with us or with any other venture firm that you're going out to pitch, I would say you want to be in a position where they have a very deep understanding of what it is that you do, and they believe in what you do. And sometimes we'll see a business where we'll say there'd be some aspect that we're not quite convinced by, like I don't know that what you just presented is really a problem for this customer that you're saying. Like, maybe it's a nice to have, but it's not like a really deep problem of something that somebody will jump on. And as a result of that, because I have that doubt on that specific piece, you could say that that's too early, because if you prove me wrong, if you say, well, now, Austin, we talked about it, it was an idea, now I have 5,000 people paying for this product, $9.99 a month or whatever, then all of a sudden the doubt that I had, which was a genuine doubt about something, was now validated, and so it is further along. So kind of you can extrapolate that concept to basically every aspect. Like, I don't know if you would make a good CEO, or I don't know if your CTO is strong enough, and so I could say that I could simplify it and say you might be too early. And that's because I don't know if your CTO can actually handle the technical load that you're saying that you're going to try to achieve over the next few months. And then as I see that, then I would then say, okay, I was wrong about that. You got it. And then we would invest. So I guess I kind of put it on both founders and on VCs to be much more clear on reasons for passing, and I put it on founders in that definitely be receptive of the feedback, and no need to try to debate somebody into investing in your company. That's never going to be productive. But at the same time, like really try to understand and hope and understand what it is that somebody might be passing on, or where they have doubts, more so than like I don't like this and it's just binary, like I'm not going to invest. People assume that when we say like we'd like to see this area more developed, they assume that means Austin's done forever, he will never invest in this company, when in reality we just want to see this one aspect more developed. And if it's something else, we try to be pretty transparent about how we do that.
Yeah.
Yeah.
No, that makes sense. I mean, sometimes you got to drill down in what do they mean by too early, to your point, right? It's not just that you don't have a product yet. You might not have done as much market research as you need to, not really understand the problem to a high level. The team isn't fully rounded out to where you need it to be successful. So I guess the nugget there is to sometimes inquire more about what they mean by too early, and see how you can kind of work towards, checking that box for them in the future.
Exactly right. Hit the nail on the head.
Okay, so you talked about team a little bit. I'd love it if you could give me some examples of like things you mentioned, some of the things you look for in like a successful founder. So if you've already feel like you've answered that question, love to hear other anecdotes about what you see in successful founders. But then maybe on the flip side of that too, what kind of turns you off about a founder? If there's something that you see that they're doing, love to kind of give that feedback to the crowd so they understand, how to approach you, how to approach other VCs, and things to stay away from if they're maybe making those same mistakes.
Sure. So a few things that we look for, to me, the best founders are those that learn and iterate quickly. And those are two distinct skills. One is learning quickly, and two is doing something about it and quickly. One, you like, sometimes teams have all the pieces and they could build anything that you want in a week, and you say a new product feature and it's done. But like, if it's not based on any like real learnings or feedback or anything like that, you'll just be building technology for technology's sake and throwing spaghetti at the wall, and there's no directed action that will lead towards success. And then on the contrast, you have some people that learn very, very quickly, that like they get it and they see a mistake and they understand it, or they'll hear some consistent customer feedback, and maybe even really be able to extract the insight or whatever that matters. And then when they try to translate it into the product, it just takes a very, very long time, because maybe they're overanalyzing it, or maybe they don't have the team or capabilities to make changes. And so we look for teams that can do both. I think that the people kind of think of like you should get venture investment if you kind of reach some minimum threshold of I've checked these boxes, and I don't think that that's the way it works. I mean, the reality is, like, we see about let's call it 2,000 companies a year, and then we probably invest in about 12. And so that means if you are in our top 10% of companies that we see, meaning everything's really, really good, there's still a 90% chance we won't make that investment. And so the question is, like, what is that other 10% that does, the top 10% of the top 10% that actually does get the investment? What does that look like, and what does that do? And usually those teams or something around one, those 5 categories is exceptional. Like you are an exceptionally phenomenal fit, and you are for our firm. Again, really, really great companies we see all the time that aren't really aligned with or aren't as aligned with what we do. And so we wouldn't be able to help or support or even being honest with ourselves, be in a position to assess at the same level that we would otherwise. So yeah, learning, iterating, and finding the right fit, and not taking it personal when someone passes on you, because it's not fit is I think you find that from a numbers game, and if you're only talking to 3 investors, it's not in your interest on many different levels. And so you want to make sure that you have enough people that you don't take it personal or feel like your whole future depends on whether this person who's sitting across from you likes you and your business or not.
Yeah, love that answer. Sometimes looking for the kind of qualitative features in some of these founders really sets them apart, I think, than some of the metrics. If they check all your boxes, perhaps there's some other underlying things that you have to look for to see if they're a fit. And one, can you add the right value? It sounds like too. There might be a lot of founders you talk to that you just don't think you can help as much as maybe another VC in your ecosystem. Okay, so kind of switching gears a little bit, you said that make 12 investments a year, anywhere from a few $100,000 up to 2 million. You're usually leading rounds. Talk a little bit about how you like to lean in. You mentioned like LPs get involved. I think that's a big differentiator. I'd love to hear about some of the disproportionate value that you provide to these portfolio companies. And yeah, I would love to hear more about that.
Sure. Yeah, so we pride ourselves on basically acting or serving as a platform and sort of a bridge between the world of Silicon Valley and the communities that we aim to serve. And what we know is that we can speak very specifically to the challenges and the issues that people from those communities have around, like, how to even think about approaching all that. And that's not to say that people in our portfolio, some of them are second-time founders, third-time founders even. We have 1 or 2. But I think that our ethos is always that of, like, how can we punch above our weight and serve based on our knowledge and based on our experience. Our relationship with our founders, we say during an onboarding call with the founder, we say we're somewhere between a coach and a cheerleader for the founders that we back. Like, we're there, we've seen a lot, but we want to encourage them, and we also want to cultivate and help refine them. But they are the star player. They are the center of this. This is not them working for me or like their job is to report to me or whatnot. Like, it's like, we work in support of the founders that we back. At the stage, downstream investors, later stage investors, they have a different relationship with the founders that they back. Ours is that of, we have to get you to a place where you can navigate this game over the long run and continue to attract capital and talent and customers, basically. So we spend a lot of time thinking about those things. So half of our firm's team is dedicated to what happens after an investment, meaning, like, the sourcing and deal flow and choosing which companies we back is half of the battle, if you will. We don't look at it like, all right, we cut a check, good luck, let us know if you need anything, or let me know how I could be helpful. It's instead like, we want to very proactively help shape how you're thinking about the company and your priorities, to just bring clarity to them and then help you execute against that.
Are you typically requiring a board seat when you make a lead investment?
Good question. We are board observers.
Observers. Yeah.
We do not hold board seats. But we do hold board observer seats for every core position that we have. And the reason for that is we do not want to be at a place where we are like strongly at odds with a founder. We are in support of founders, particularly at the stage where we're investing. That's all you can really be in support of. And so why even take a board observer seat at all? is because what we find is that sometimes, particularly people that come from the backgrounds that we're talking about, if they go and get a check for, you know, a $7 million check from somebody a lot bigger than us that maybe less culturally familiar with this person or how to talk to this person or whatever, the relationship dynamic can turn into one where they feel like their job is to have this investor as their boss. And we want to make sure that we're in the room to make sure that it's still the founder's vision, which is what we got behind originally. That is the vision that's being carried out. So we like to be observers in many ways to keep the founders in charge of the business.
Okay. Companies that raise, hit their metrics, you've made an investment, they're doing well. Do you reserve capital for follow-on investment? And then how do you talk a little bit about how you would help them kind of raise their Series A? What type of VCs are leading those rounds?
Sure.
Love to hear that.
Yeah, so we do about 40% of the fund is reserved for follow-on capital. So we plan on supporting, in good times and in bad to the extent that we can. We want to make sure, so our follow-on strategy is something we think and spend a lot of time thinking about. And a good amount of our capital is obviously dedicated to it. So what do we do in terms of support around that? So we have what we call kind of the 4 pillars of fundraising, which is will take a long time to go through. So I'll just basically say what we do is we start working with founders very, very early in their fundraising process. One of the things that we recommend, which I recommend to any entrepreneurs listening to this, is before you are fundraising, have investor conversations where you explicitly state that you are not fundraising, but you are talking to them because of whatever, you do your homework, but you're talking to them and say like, hey, I know you're an investor in X, or I know that you invest in this category or something like that, or you've invested in a founder that's like me that has this type of background or whatever. And you're reaching out to 4 or 5 people to talk to them about your business from the perspective of, I am not fundraising. I am not pitching you. But I respect your opinion and I respect your experience, and I would like to get the feedback. And when you do that, and when you're not in fundraising mode, you find so much more information out about your business and how it's being perceived and the questions and doubts that you just don't get if you just go straight into pitching. And as a result of that, it'll help you course correct if you're off course to any degree, where you thought that you had to be growing at 40% month over month, and people are like, well, no, I care more about your engagement than growth based on this type of business model. And then you're like, oh, okay. And then you can spend time refining that. And then the best thing to do is to go back to those investors after you've course corrected and say, hey, Mr. or Mrs. Investor, I took your advice. That was phenomenal advice. We went from focused on growth to focused on engagement, and our numbers have done this. I'm going to be running a fundraising process, raising $3 million in April, and I'm setting up meetings now. Would you be interested in doing that? After you say to somebody, I took your feedback, I did your thing, it's addressed, and that was your main concern. Do you want to hear about my business now? It's nearly impossible for a person to say no, and they know that you're coachable, which is another thing that you look for in founding teams. And so, and then you, at that point, concentrate as many meetings as you can possibly do at one time into a very short period of time. Don't stretch it out over months where you talk to one person here, 2 people over here, or something like that. That just is a very, very inefficient way to run a process. And so those are the types of things that we talk to about to all of our founders, and then we make a bunch of introductions to folks, lots of different funds that are involved as LPs in our firm. And so we make those friendly conversations, and then down the road, we make a whole lot more like actual investor conversations when they are trying to pitch. And then, we've been fortunate enough to attract some capital, follow-on capital, or new rounds led by some top tier investors.
Great.
Yeah.
Great. No, I've actually never heard that before, to actually reach out under the pretenses of not fundraising, just getting feedback. doing the research and making sure you're talking to the right people with that expertise in your vertical. I think that was just really, really good advice. So thank you for that.
Yeah, I mean, the other benefit to that is what you will see, which will happen during your fundraise if you weren't to do it otherwise. What you'll see is you're going to talk to 5 people and give 5 different opinions about what you should do and what needs to happen. If you were to just talk to one person, you would think, oh, this person knows everything and I need to pivot this business into this direction, because every investor is going to probably think the same way. And that's not the case. But then you can distinguish what are the commonalities of, like, if everybody says like, hey, your CTO is not the level of talent that you are as a CEO, and you need to sort of think about how you're going to level up on that end. If you hear that consistently, then like that might be something that you really take into consideration, and you know it's going to come up during your fundraise. And then the stuff that you hear that's scattered everywhere else, that's just noise, and you can take the feedback and understand different people's perspective on why, but ultimately you can make a decision on which direction to go.
Yeah, definitely. Great insights. Well, I know we're running up against time. Can't believe how fast this has gone by. So really appreciate your thoughtful answers. I hope we get the chance to do this again. I guess my last question is, we had COVID, so I'm sure like being a VC kind of changed in the COVID days, having to meet everyone virtually, making it difficult to get in front of people face to face. And now, with interest rates going up, the market softening, I'm sure it's changed even more. Talk to us a bit about your outlook over the next 12 to 18 months. What are you telling your portfolio companies? What are you telling new prospective portfolio companies that you're working with? And how active are you being in writing checks and investing in companies?
Yeah. I usually refrain from talking bad about other ventures VCs, but I think that way too many people are hard pivoting their strategy, which to me means you didn't have a strategy in the first place, based on market changes. So we did a deal a month for the last 2 years. We're going to do about a deal a month for the foreseeable future. That's what we do. We take advantage of the time diversification. So in hot markets, we're investing. In cold markets, we're investing. We construct a portfolio in a way that we think is much more thoughtful. That said, I think because a lot of people are slowing down, it naturally puts a lot of downward pressure on valuations. I wouldn't be as sensitive to valuation. The valuation that either you got or your friend got a year ago is completely irrelevant today, and won't maybe hold as much as you would like to. So I think the more macro shift has to do with the shift away from sort of momentum investing to more like actual kind of business fundamentals, if you will. And people, you'll see more blog posts about unit economics, profitability, and default alive, and terms, phrases like that, where people want to see that your business is actually a viable, sustainable business. And that's probably what's more attractive in the market than hyper growth with bad economics, which candidly would have gotten you funded for the last nearly decade. So I guess I think it's an exciting time. I think the investors that are real will still cut checks and will still be supportive and whatnot. And the last thing I guess I'll leave you with is like, these are the times when all the big businesses get built, recessionary time periods. Like this is because there's more talent available, there's less noise. All of these things kind of come together. So I wouldn't slow down. If I was a founder right now, I'd be like, oh boy, this is my time to shine.
Yeah. And a lot of these investments, when you're getting in so early, have a long tail, right? So who knows where we'll be in 5 years from now when the company's hitting the growth stages of the business. So
Exactly right.
Awesome. Well, so many other things I could have asked you, but I know we're at time. I want to be respectful of yours. I really appreciate you spending the time with us and being so generous with your answers. If anyone needs to get in touch, I'm sure they can reach you on LinkedIn. I do have a couple. Go ahead if you want to say something.
I'll say if anybody, if there are entrepreneurs that want Slauson to look at you from a funding standpoint, meet us at slauson.co. So Slauson is a street. Meet us. So MEETUS at slauson.co is the email to reach out to, and you'll hear back. We want to be respectful of your time if you take the time to talk to us and tell us about your business as well. So you will hear back from us. And yeah, that's about the best way, but
Great. Good. No, I appreciate it, Austin. Thank you so much, and have a good rest of your day. Looking forward to doing more of this in the future with you.
Awesome. Thank you. Have a good one, everybody. And thanks for the support to all the sponsors.
Got it. Take care. Thanks, everybody.
You're on mute, Vera, if you have something to say.
Great job.
Thank you.
Very lovely. And Lena, you're on mute as well. Lena, you're on mute.
Oh, didn't notice. Thank
Yeah,
you.
you're talking. Yeah, we're all talking to them, to ourselves these days. No,
Yeah.
great job. I think I fully understand now what this is about. And
Yeah.
Please count us in, because I'm already chatting to my to somebody who was actually from the bank who also joined. And next time, if you want us on, we'll really, we'll do it earlier, and we'll, he'll tap into his world, me, and then definitely will be more folks that could join in. And I was thinking we should do the same on things that we're doing, right? We should invite you, and you could invite your people, right? It's like if we're already doing it, may as well increase the, right?
We'll have some participants now, I think, in the meeting, right?
I thought that
I'm
everybody.
sorry.
We do have some participants still in the meeting, correct?
Yeah, actually, I have to end this webinar for now, for the recording.
Yeah.
So you can, if you want, you can take your conversation offline, and then.
Not
Yeah.
everybody.
Thank
Okay,
you.
sorry, everybody.
Thank you so much, Vera.
Okay, bye.